Welcome back to our Unheated podcast, a podcast by Theia Ventures, an early stage climate tech fund based in India. Today, we're really honored to have Krista with us from ClimateAligned. And so, thank you, Krista, for agreeing to be on the podcast with us and really looking forward to our conversation.
Me too, Priya. Thanks for having me.
Yes, so just to give a little bit of background on ClimateAligned, it's a fintech company based in London that's developing the first AI platform designed to integrate end-to-end sustainability, ESG, and climate factors and data specifically tailored for debt investment decisions. This platform helps to institutional investors to find and manage investments that align with their climate and emission targets while also mitigating the risks of greenwashing. And a little bit about Krista. So Krista is a Chief Commercial Officer of ClimateAligned. She's a climate finance expert with years of experience at Climate Bonds Initiative and has also worked closely with financial institutions to advance green finance initiatives. She's played a key role in building regulated green taxonomies, including collaborations with the EU and PSF. And she's previously worked at University of Cambridge's Centre for Sustainable Leadership or Development, also at Longevity Partners, at Silvera, and at VC fund Theia Ventures. And Krista holds a master's degree from the London School of Economics in Environmental Policy and Regulation. So welcome, Krista, and would love to kickstart this conversation with just perhaps a question about what inspired you to start ClimateAligned and what gaps in the market did you see that led to its creation? And also sort of connected with that, what do you think sets ClimateAligned apart from other existing AI-driven platforms in the sustainable finance space?
Great. Thanks again, Priya. And thank you once more to Theia Ventures for having me on the podcast. It's really exciting to be here and have this conversation with you. And thanks for the kind intro. Maybe to a little bit build on that. As you mentioned, I've worked in the climate and sustainable finance space for about a decade now in different roles, looking at these problems and solutions, emerging solutions from different points of view. It was really through the sort of years that I spent at Climate Bonds Initiative working on developing standards with experts in different sectors and activities and sort of industries, and then trying to apply those definitions, whether it's green taxonomies or transition planning or anything really, to the actual markets, the capital markets, where I started to see that it was really quite interesting to sort of see two developments happening concurrently. One was these ever-changing and sort of accelerating moving goalposts, both from the point of view of the investor and potentially an issuer of a security underwriting bank to say what is credible, what is good, what is greenwashing on the other side, and then also from the regulator's point of view to try to set these rules and having these disparities across different geographies, different jurisdictions. That puts sustainable financing institutions and investors in a really tricky, precarious position, really, to try to keep up with all of these moving parts. And we had a lot of people, when I was selling data sets and developing research and analytics products together with CBI and others to the participants in the market, asking us, well, what about if we tested a new theory of change or put a new layer of thought or different definition as an overlay to, for example, a particular market segment like green bonds? What would that look like? And a lot of this analysis at the time, and still is, done by hand by human analysts. We have to try to compile and keep up to date with lots of really divergent data sets that are predominantly comprised of really unstructured data that lives in PDF documents and CSV files on websites, potentially even in internal private systems, which we'll touch on, I'm sure, later in the conversation, and try to make effectively structured sense that is decision relevant insights, data, tools even from that. And so my co-founder Alexia and I started discussing ways to do this better, probably at the beginning of 2021 already, with a more serious push towards basically leveraging a new sort of tech stack with the advent of hopping from NLP or natural language processing into large language models and other types of actually generative AI in 2022, when we then decided to set up ClimateAligned as a standalone company. And so we've now been operating for just under 2 years officially. We incorporated in August 2022. And to your second question, I think really what sets us apart is this sort of mad vision of trying to harness this new tech stack against this messy these sets of, I should say, data that keep being developed and sort of being built as we go. We're sort of building the plane as we fly it, or the bicycle as we cycle, or whatever analogy we want to use here, to say, let's actually build these end-to-end workflow tools as opposed to individual snapshots in time as a static data set, for people to be able to be empowered, the experts in these organizations, whether on the sell side or the buy side, to be empowered to understand the implications of their decision making much faster, and therefore scale the decisions that we need to make to direct capital where it needs to go from a climate, nature, and other sustainability perspective.
Great, fantastic. Thank you so much for that really detailed introduction and background to Climate Aligned and how you got started. So, just curious to understand, how a typical customer would work with you. So, you mentioned that the objective of the data stack or the tech stack is to help give clarity and transparency to be able to direct capital towards the right locations that are climate positive. So, let's say, I don't know, any example of perhaps a sell side or a buy side client, which is in the financial institution sector. How would they engage with you, and what would be a success story of how they would use your data?
Great, thank you. So we're a B2B SaaS company, so software as a service. We also sell individual data sets, but really the predominant way in which our users and our customers interact with the product is they use a licensable software product, a web application in the most common case, to assess typically a debt capital markets instrument like a green bond, or a group of those instruments or their issuers. So let's say a group of companies, a group of countries who are putting these securities out to market, or who already have these securities outstanding in the market. And a typical workflow could be, if we take the buy side analyst as an example, and that's where we started to try to understand the investor's workflow before then moving into the sort of originating, underwriting, structuring all of the activities to put these deals into market for more volume. So if we start with the buy side, the analyst would interact with the platform to see when there's new opportunities, or to look at their existing portfolio against a set of rules that they can devise. So we're really heavily leaning into customization with the use of AI, and they can draw a comparison between their own view of the world, so perhaps an internal taxonomy or another kind of set of assessment parameters, with all of these regulated and sort of market guidelines that we have out of the box from folks like the EU Commission, Climate Bonds Initiative, ICMA, and more. And it cuts their decision-making time in understanding whether either a new opportunity is in line with their view of the world, so they can recommend it to their portfolio managers to buy this bond, or if they're doing annual or quarterly or monthly reviews of the portfolios, or rebalancing portfolios, they can get there much faster. And we see at least a 10x improvement in that decision making with leaning into these AI powered tools. So there's both a sort of cost center benefit, as well as an opportunity discovery benefit. That means asset managers can build more easily new funds to meet the growing green bond mandates that they have from their asset owners.
Great, fantastic. So when you mentioned green bonds, then is that one of the main products? I mean, what are sort of some of the most popular products that you provide these data insights into, and how is it structured? In sort of country wise. So most of your clients are in the developed world, or are they in the emerging market world, or a bit of both?
Yeah, great questions. Green bonds are where we started, mostly because there's both a sort of existing understanding of them being an impactful way to invest into the climate transition, as well as things that are already green, so kind of climate solutions and the transition itself. There was really a dearth of solutions for green bond investors specifically here, so we decided to begin there. But the nice thing about this type of technology that we're using and building, sort of effectively an LLM driven product with significant engineering systems and controls around it to understand very specific context around the greenness or the climate contributions of either individual assets, projects, activities, or even entire issuers or countries or sectors, that it's applicable to lots of things. And that means we can work with institutions everywhere. So to the question of emerging or developed markets, it's a good mix at the moment. A lot of the existing green bond investors in terms of the fund management companies and the banks that have the asset management arm tend to be, as with most of finance, headquartered either in EMEA or North America. So a lot of our customers are there. But we also see a lot of traction, especially now that we're moving also into the sell side, which we can touch on in a moment, with emerging markets and especially Asia, lots of the Middle East and North African region. I think maybe on the sort of coattails of the last couple of UN COPs as well, we've had lots of interest and more kind of volume and kind of new product development, really predominantly in emerging markets vis-a-vis their DM counterparts.
Next question was actually about the sell side. So the new bracket of clients that you're developing on the sell side. What's sort of their profile, and how do you approach them with potential offerings? Is it similar to what you would offer to the buy side?
Yeah, great question. So we started doing this with the buy side first for the reasons that I outlined before, but also because a lot of finance activities, generally speaking, if we leave the greenness to the side for a bit, converge on an understanding of relative performance. Folks generally need to be able to identify how well a potential opportunity set stacks against a peer group, for example, or to see gaps and identify best practice. That's why we have so much activity in ratings and benchmarking and so on in green and sustainable finance and in conventional finance. So we had to cover all of the sort of relevant use cases for the buy side and cover enough data for them to be able to make decisions before we go into the sell side bankers. And now what we've actually found is that we have quite a bit of inbound interest from, we call them DCM, so debt capital markets teams in banks. So the folks that originate deals with issuers of financial securities, mostly in our case, they're bonds, but they could also be loans and other debt financing instruments, to say, hey, we actually have a similar use for data. We might need the end output to be something a little bit different, like, for example, a research report or even a green bond framework that they help their customers to put together. But effectively, the analysis is the same. So if I'm an analyst in a sell-side bank working in a DCM team, my job would typically be to work with let's say, a corporate issuer as an example, to help them to say what kind of sustainable bond framework or other product, both in terms of the documentation as well as obviously where the money is actually going to go, should I put together that will be well liked and therefore get me a really good cost of capital outcome with the institutional investors on the buy side. What does best practice look like for my sector, my geography, for the specific taxonomy or other rule sets that I've either voluntarily decided to adopt or that pertain to my geography? And we can help them facilitate those workflows a lot faster as well. So we don't always have to start on the sell side either to build effectively an individual benchmarking exercise from scratch, leaning obviously heavily into institutional knowledge and expertise, but we really want to empower the experts to get to that endpoint faster, to a point where they can even test ideas and go and sell these deals effectively to corporate customers or even countries, because we need as much of this financing volume as possible to start flowing into the market to actually be able to finance the transition outcomes in the real economy that we so desperately need.
Yeah, absolutely. And with a lot of these sell-side banks, many of them, like HSBC is one which has a very large DCM team. Many of them, to your point about the country kind of sales, basically looking at issuing bonds to countries rather than to corporations. Many of them work with emerging markets, and they look at sort of going beyond green bonds, potentially blue bonds and other types of, kind of products. So what are some of the range that you see at the country level, and how can this help us to, in the broader question of, carbon mitigation, climate adaptation, etc., how can that help us kind of move in that direction and carbon emissions?
Now we're on to my favorite topics. How much time do you have? Definitely, as you say, there's, especially in the sovereign, sub-sovereign and agency issuers, which are, mind you, the much bigger chunk of the bond market. This is a $175 trillion market ending volume, and about 3/4 of that are sovereign bonds. So countries have to finance themselves through the capital markets, obviously, as sort of complement to their fiscal revenue as well. In that space, we're already seeing what my old boss at CBI calls all flavors of ice cream. So green, social, sustainability linked, even transition bonds from the government of Japan just recently, though a developed market issuer, but sort of testing new labels. And as a subset of the green, more and more slower to pick up adaptation and resilience labels or related labels, and blue bonds as well. So there's obviously the sky's the limit for SSA issuers to figure out what they can and should finance. And then there's the question of, really, it's about the entire capital stack. It's not just the label of the bond or the individual use of proceeds of an individual bond or program. It's how do we make this economy-wide transformation happen? And that's why I find the intersection of what we're doing with leveraging AI to try to understand the sort of equivalence and the gaps and the benchmarks that anyone could create in the market against all of these different sort of views of the world so exciting, because at the end of the day, what investors will want to look at and what then therefore DCM bankers will try to help their, for example, sovereign customers with is, how is this entire country moving towards what I think is an acceptable pathway towards a net zero and resilient world in a way that is just, especially in the emerging markets. So we can do a lot of that fundamental research and assessment assisted with AI and get those deals to market faster. And then the market itself will have sort of, the shakeout moment to see where the, let's say, current level of ambition lies on any given day.
Interesting. And with these emerging economies that you mentioned, so North Africa, Asia, Middle East, etc., do you often end up sort of having teams out there that can actually, look for the data, mine data, look for kind of discrepancies, etc.? I mean, a lot of these economies perhaps are not as data rich as the ones in the developed world. So I'm just curious if you face any operational challenges, or is there any kind of room for opportunity or improvement in the data collection process in these locations?
You're completely right. And yes, there's tons of opportunity. I think we've only scratched the surface, us specifically, and the market collectively, and others that are doing great work in this space as well, commercially and otherwise, and in government. I think one of the things is that we also kind of have been, I guess, advantaged in terms of building our product in this way, is that there is more data than one might think, looking at it from the point of view of someone like me sitting in London and not speaking a lot of these regional languages, at least to the point where I can read technical documentation in a local language. Now we can both source and structure data as well as translate it with the help of AI, with human checks involved. We also have humans in the loop in all steps of the process. It just means we don't have to scale the human part, we have to scale the technology part that underpins it. So the data gaps are thankfully not as bad as we thought they might be for the purposes of the bond market. The next step, which I think is also very interesting and exciting, and where we'll definitely look to partner even more with local actors, and certainly also to keep a sort of keen eye on what happens in government level partnerships, is not many emerging market economies are predominantly financed in the bond market. So many don't have bond markets at all, or don't have access to institutional capital that needs to be hard currency. So there's this sort of local currency and structural element of the actual, paying for changes in their real economies. A lot of that can be things like loans or green credit lines and so on and so forth, that are still debt mechanisms and credit investor worthy, but much smaller, and need a lot more work in terms of, okay, if I'm collecting sort of grassroots economic data from SMEs, for example, in a specific country, then that requires partnering with national banks, for example. That requires probably some concerted effort through government agencies, and to see what kinds of data one can tap into there. So be really keen to, and this will be a core area of focus for us in the coming months and years, to see where we partner rather than reinventing the wheel, and what other mechanisms of data aggregation might become available.
Understood. Interesting. And when you think about the future, so obviously you're at the intersection of the two most exciting themes today in the world, AI and climate. So how do you think these two will continue to intersect with each other and grow maybe independent of each other? How far do you think we can continue working with AI to help us solve climate problems? Or is
My
that's also
goodness.
opening up a big can of worms?
It is, and I was going to say you're actually probably better placed to answer that than I am, given the part of the ecosystem that you sit in. But of course, I'd be remiss not to say that I am almost infinitely optimistic about this, with some caveats. And I think certainly in my area of financial technology and working with financiers and investors, I think there's this sort of overwhelming sense of opportunity, but laced with a lot of maybe appropriate caution as well, because people don't yet understand how these technologies work, and how could they? These are brand new. I mean, when we started ClimateAligned, it was almost the very beginnings were just making sure that we can actually make happen what we had envisaged to create effectively, and now we know that we can, but it's still very early days. So there's this sort of, how quickly do we adopt certain things that could be beneficial into use? I think the sky is the limit almost in terms of the actual technological potential. And a lot of it comes down to, and this is maybe boring and obvious to say, but I can't stress this enough, just human collaboration and understanding where a particular solution is actually the best one for a given problem. And then we can bring all of these interesting things together, and it taps into things like we were discussing data availability, remote sensing, satellite imaging, all of these things that there are many, many other companies and government agencies and others that are specializing in. But I could definitely see a future in the not too distant future where we bring a lot more of these things that are sort of location specific and context specific together, with much better ways to access them to not only make decisions, but then actually optimize, at the asset level, at the project level, in the real world, as it were. So very optimistic, but also sort of wait and see and try to do our part in demystifying what's possible now versus what's still, veering on science fiction.
Yeah, absolutely. And on that topic of science fiction, if you're thinking about, new technologies that are being launched every day in climate, like direct air capture, carbon capture, sustainable air fuels, and many of the people that we met when we were together at the conference at MIT, how do you think they would grow with the help of a data tool or data stack like yourselves? How would that help? Because a lot of these technologies are really hardware capex oriented,
Yeah.
and just need a lot of capital. But do you think they would also benefit from a tech stack, access to data to help them to scale faster in sort of, I would say, an unknown time horizon or unknown gestation period?
Yeah, I definitely think so. And I really enjoyed the conversation that we were having, you from a venture capitalist point of view, because the discussion around, VC isn't always the most applicable type of capital, patient, but in other ways, not so much. And just the scale, as you said, of just startup capital that you sometimes need for these hardware heavy or otherwise early technology readiness level solutions. So what I'd like to really see, and this is definitely a core part of our long-term vision as well, is to really aid the discovery and almost matchmaking of, here's a technology that needs financing, here's a financier that would like to provide that financing, for those to come together much more easily. And that means the ability to conduct really deep sector level research and make the appropriate connections, not just between, I guess, hypothesis and then conclusion, but also human to human. We're almost seeing a sort of micro version, if you will, of this flywheel idea come to fruition in our current product, where we can start to match indirectly the preferences between the buy side and the sell side for green bonds and beyond in the bond market. And certainly, actually, a lot of these technologies that we come across, whether it's direct air capture or otherwise, a lot of the kind of deep mitigation technology in hard to abate sectors, industrials especially, could actually benefit from bond investment. But someone has to structure those deals, because it's so out of the kind of consciousness of the typical bond underwriter as well as the bond investor, unless it's done within the confines of an established corporation or a government. So I think there's lots of potential there, and hopefully we'll get to be a small part of that system also going forward.
And of your experience, going to being involved in the public sector or in academia, and also visiting some of the COP conferences over the last couple of years, what's been your understanding of how this attitude towards climate, both mitigation and adaptation has, evolved over the last couple of years, and in terms of how much private sector financing is going into this space? Because I was at the last COP 28 in Dubai, and it really felt like a mini Davos. It didn't feel like a policy or advocacy kind of conference. So it was very good to see that some of the big hitters from, banking and, large multinational corporations and key decision makers of big economies were basically there to understand how to integrate climate into their, everyday sort of business decisions and capital allocation. And I was just curious to see if that also was your experience, and how do you think it's going to be in the next decade, which is obviously going to be very crucial for us to make sure we don't breach another 2 degrees of temperature increase.
Yeah, I mean, I couldn't agree with you more on the COP28 part. And actually, I may be shot down for this, but I'll say it anyway. I was actually really happy with the outcomes in the end, because we have to understand that when we go and convene at the Conference of the Parties or COP at the end of each calendar year, that's basically a rehashing of the negotiations and the discussions that have already taken place within the UN system, with the midpoint being the SB conference in Bonn that takes place every June, so it's just gone. In light of that, the fact that we had any fossil fuel wording in the agreement itself, and we had fossil fuel financiers and investment bankers in the rooms, not just in the, let's say, trade show part of it in the green zone, but also in the blue zone official negotiation arenas, was, I think, a phenomenal leap forward. It feels like not fast enough, and that's true, of course, but that is the entire system moving very slowly for lots of different reasons around just political coordination, which is always challenging. As per your sort of assumptions there, in my decade or so of working in this space, it's moved in leaps and bounds, and that makes me optimistic for the future as well. This year's COP is obviously taking place in November in Baku in Azerbaijan, and it's already been termed the Action COP or the Finance COP. So I'm really curious to see what comes from the sort of discussions on the actual collective quantified climate goals that now need to be put into place, and updating the financing mechanisms that had previously been agreed under the Paris Agreement as well. Because I think there's the sense that private sector capital is crowding in, but we need to figure out further and faster how we blend it to de-risk it together with governments. And this is the thing that there's the most, I think, both work still to do in just practical solutions, and that might also be unlocking some of the capital for the riskier investments that we were alluding to before, and the harder to demonstrate, earlier in stage and so on and so forth. But also just, the uncomfortable truth of someone's got to pay, and, other countries have lower credit ratings than others. How do we square that circle? Blended finance in this COP is the thing that I'm looking forward to, and we had some really positive signals of that already in Dubai.
Yeah, that's great. And with blended finance, there's obviously some debate about how that can actually work at scale, because obviously the importance of blended finance is to crowd in commercial investors in the beginning, and then eventually blended finance has to move away, because then commercial investors have to do their job and fund this as a regular bankable project. Do you think a lot of these structures can be quite I would say complex to operationalize, etc. In your view, and especially in the kind of data stack and products that you're creating, are you looking to embed blended finance and some kind of concessionary capital, first loss, default guarantee, etc., into any of your products?
Yeah, I think definitely there's probably 2 things that we would do. One is the sort of providing almost the data and foundations for the matchmaking piece that I was alluding to. So being able to highlight opportunities in specific, probably projects or things that could be either, packaged into a bond or to some kind of debt fund that would need capital. And then it's up to the the folks with the projects and the folks with the money to decide whether their risk return appetite meets in the middle. Then the other thing that we could potentially do, and we've had some discussions about, is helping some of the institutions that are directing concessionary capital, whether it's directly through grant provision or even government agencies, or certainly the DFIs, the development finance institutions and multilateral development banks, to see how their workflows in identifying both investment opportunities as well as kind of blending mechanisms could be made to go faster. So we're probably unlikely to get involved in executing transactions directly, because it's a very different kind of business, but certainly, I guess, thinking about it from the point of view of how do we, highlight decision relevant information for anyone in that space would be really interesting. And it's sort of a personal, professional passion of mine to figure out how these things match. And we've done some early work with folks like the IFC and others to sort of understand where they are and what workflows could be prone for this type of part automation, human empowerment. Some interesting examples, hopefully a bit more to announce later this year and next year as well.
Great. So that sort of brings us towards the end of our conversation. But would love to sort of turn it over to you to sort of share anything else that you'd like to allude to about the work that ClimateAligned is doing. You mentioned lots of projects to be announced, but if there's anything in specific, we'd love to hear it, and perhaps any kind of synergy that we can have together with you, as we're based in India. And I don't know if you have any projects emerging in India, but would love to hear your take on this particular market as well.
Thanks, Priya. Firstly, it's been a pleasure to join you for the conversation. We don't have anything specific on the ground in India, but obviously look a lot at the Indian market, mostly for the sort of issuers and underwriting sides. If anyone listening to the podcast or watching back the recording has an interest in having a discussion about the applicability of sort of AI-powered workflow tools in any green finance activity across the system, would be always willing to or really excited rather to have a chat. We have lots of other kind of announcements coming up later this year, mostly around the inclusion of new data and new levels of assessment. So think green bond impact reporting and how those get made and assessed and understood. And then also this sort of connection between the issuer level and the bond level. And this is obviously very applicable to different parts of the world. So would encourage any interested parties to reach out, and obviously to try our product as well. There's a live free trial version available on our website, climatealigned.co, and you can always reach out to me directly as well.
Perfect. Really looking forward to it. And thank you so much again, Krista, for taking the time to chat with us. Really appreciate it, and super interesting. Learned a huge amount from the work you're doing, and lots of admiration for the kind of sophisticated tools that you're building. So look forward to staying in touch. And thank you again for being part of this discussion.
Thank you, Priya. Really appreciate the invitation and look forward to our future conversations.